where my thoughts escaping, home, where my music's playing, home, where my love lies waiting silently for me.
This is Drew Brown, an attorney at the Greensboro Law Center. We represent over 1,000 North Carolinians who have gone to Virginia and South Carolina and taken out high-interest car title loans. We contend that these loans are illegal if given to North Carolina residents. They violate our usury statutes, and really the people of North Carolina are the victims. We've had success working some of the cases out, and if you hire us, you can do so on a contingency fee, which means you don't only have to pay us out of the money we get back for you. Give us a call, 336-478-6000. That's 478-6000, the Greensboro Law Center. Thank you.
Closer to my dream.
Welcome to RealSavvy. I'm back. This week we have Mr. Andrew Moss of the Office of the Comptroller of the Currency. I'll let him explain it. It's one of those agencies, though, that has a lot to do with our money. So I try to keep them close and really friendly and professional as possible. What's up, Andrew?
Hey, Chris, how you doing? Good to be with you today.
Yes, sir. Thanks for, working through all the challenges, weather, technology, and everything so make this happen. But I wanted to talk again, if you could just go through a little bit about the Office of the Comptroller of the Currency. I know it's a portion of the Department of Treasury. Is that correct?
Correct. So the Office of the Comptroller of the Currency is a little known agency, but has a major impact. We are the supervisor of national banks. And when I say national banks, we have a dual banking system in this country, one which regulates banks that are chartered by the state, and another that is regulated by the national entity, which is the OCC. We are an independent bureau of the Department of Treasury. We oversee about 1,200 banks nationwide, and those 1,200 banks comprise about 70% of the assets held by the financial institutions in this country. So when you think about banks who are being supervised by the OCC, it's typically like the Bank of America's, the JP Morgan Chase, the Citibanks, the Wells Fargos, but we also supervise the smaller institutions such as the Mechanics and Farmers, which is a MDI down in North Carolina, and others, community-based banks that have like First National Bank of Carolina or something along that line. So whenever you see national in the name or national association, those are the banks that we supervise.
So do you work in conjunction with or separate from the individual state Department of Banking?
So we work typically separate, but we do have some coordination with them on banking activities, particularly when there are policies that may impact an institution on a statewide level, and there could be either a merger or acquisition. We may work with those regulators as well to handle those transactions or to oversee those activities, those corporate activities.
Okay, so let's talk about Project Reach, which is the reason why I have been chasing you to get on here. Project Reach is designed to help stabilize. Is that the best word?
Well, in a way. So what we're doing with Project Reach, which stands for the Roundtable for Economic Access and Change, it's an initiative that the agency has launched back in July of this year to really respond to the social unrest that came about after the George Floyd killing. The acting comptroller, Brian Brooks, was very disturbed by some of the actions that were taken by some of those who were responsible for George Floyd's killing. But he also recognized that a lot of the unrest was due to the lack of full participation in the economic system by communities of color and underserved communities, meaning that they're not getting the same opportunities that everyone else has. It's not just looking at it from a social level, but also on an economic level. And in order to ensure that communities can have that or can build on social respect, we also look at it from an economic respect, which leads into that. And so with Project Reach, we are trying to look at some of the structural barriers and find ways of reducing those challenges or limitations that they present to the communities that we're trying to support here. And then what we have done, we're looking at developing what we have developed 4 work streams that are tasked with experts from the banking industry, civil rights organizations such as NAACP and the National Urban League and Operation Hope and others, along with financial technology firms such as Credit Karma and Plaid and others such as Steady, who are putting together the technology to help with bridging this digital divide and the banking or financial or economic divide that we see as well. But just to go a little bit further into what we're doing with Project Reach, one work stream is dedicated to addressing the challenges of what we see or who we deem as credit invisible, meaning that there are about 45 million Americans that do not have a credit score or either have a very thin credit file, and that limits them from applying for mortgages or either a small business loan. So what we're doing with this, we are now developing in coordination with those different stakeholders, such as the banks and the community organizations and the financial technology firms, a new credit decision-making tool that would help with expanding on what is seen as a traditional credit reporting structure and looking at alternative data such as direct debit authorizations, which we refer to as DDA, and also looking at other types of payments that are not considered in the traditional credit score, such as rent payments and subscription services that are paid over time by, like for instance, you pay your Netflix on time, you should get credit for it because that is a bill that you're paying on a regular basis, but those things are not currently considered in the credit score. So we're trying to expand that data file so that more people can be deemed credit worthy. And by having more people who are deemed credit worthy, then you're looking at the opportunities for more home ownership. You're looking at more opportunities for entrepreneurs to start businesses. And so that's what we're trying to do with Project Reach. We're trying to explore that and build upon that. The other thing that we recognize with Project Reach is that in order for communities of color to really feel comfortable, we're hearing a lot about the vaccine right now. And I'll back up a little bit. A lot of people are saying that communities of color are not willing to take the vaccine because of distrust. And a lot of that is a result of the Tuskegee experiments and other types of disparities that come about when you're looking at like healthcare. Well, banking also had that type of like situation or those types of concerns over time. And that's why minority-owned banks were created. And they are also still a very critical source for building trust within the communities that do not have the resources to expand or build on the economy or on the economic benefits that are afforded to others within this country. So what we're also looking at through Project Reach is how we can revitalize minority depository institutions, which we refer to as minority-owned banks. We're trying to build out opportunities to have them receive investments, and through those investments, helping them to build out their infrastructure so that they can provide those same services, suites of services and financial products that that others have had the opportunity to benefit from throughout this country. So that's kind of like an overview of what we're doing with Project Reach.
Now, before I even go into like deeper questions specific about the program, I have to ask the 1,000-pound gorilla in the room. How does the election and the changeover potentially affect this program?
Chris, one thing I will say that's very unique about this, this initiative was kicked off or launched by a Republican appointee. And he is someone who has had a very enlightened view of community. And I will say, as we move forward with this initiative, we have found that there's been a lot of support from both sides. I don't see Project Reach as being a political initiative, but more of I would say, apolitical, either bipartisan effort to really support the communities that need these types of resources. And I have not seen anyone that has had something negative to say about trying to help people who need the type of assistance that we're trying to provide through Project Reach.
Yeah, and I saw like the group of, I guess, founding participants included Mark Morial, president of NAACP. So that kind of lessened the emphasis I wanted to do in this conversation about that, because I figured that with their due diligence and work with the program, that they wouldn't sign on so aggressively and be so visible with it if that they thought that it would be something that couldn't sustain the transition.
Absolutely. We've had relationships with Mark Morial, with the National Urban League, and Derek Johnson with NAACP over the years. As my role as Director for Minority Outreach at the LCC, it is to ensure that those types of relationships and that kind of communication from those community stakeholders is really fed into what we do at the LCC from a policy standpoint, as well as from other types of supervisory challenges or matters that may be brought to our attention by those particular community groups.
It's a very ambitious program in its scope, just from our brief conversation, the material that I read about it. How will you measure? Like, are there certain long-term goals, and how will the success of the program overall be measured?
So that is a very interesting or very good question, because what we are trying to do is not, we've had hundreds of years of challenges when you look at inequities or disparities within a particular community or a particular aspect of our society. And we don't expect this to be something that will solve the problems overnight, but I will say at this moment in time, we are seeing a movement created through Project Reach where we are starting to move the needle in the right direction. And while we are not the actual developers of these particular goals that are being structured through Project Reach, we are leaving it to the industry and the other stakeholders to put these things together. We are providing them real-time feedback from a supervisory or regulatory agency that has a responsibility to ensure that all communities have fair and equal access to capital and credit. And that's what we're doing in this. We're ensuring that the role that the banks that we supervise will meet those requirements, and that those community groups that are serving those particular constituencies are also able to be at the table to talk about what's actually needed, because they are the ones who are on the ground, who are working with those communities, and they're the ones who have the better knowledge of how to support those particular neighborhoods and population.
Home, where my thoughts escaping. Home, where my music's playing. Home, where my love lies waiting silently for me.
Affordable housing is a big issue for RealSavvy, and we try to write as much as we can. I mean, it's a major issue for our country. How is Project Reach geared to address some of those issues? I could imagine that some of the banks have REOs, real estate owned by that bank, and there could be opportunities that could potentially surface as and work in conjunction with Project Reach.
Yeah, so what we have seen recently, I mean, affordable home ownership is a major part of this. And we have currently looked at some of the down payment assistance programs that have currently been implemented by some of the banks that are participating in this initiative.
Mm-hmm.
In particular, we have found that there are several banks that might have had philanthropic down payment initiatives or programs where they've provided what we call a soft second mortgage. Okay. And mortgage is pretty much not paid back if the home buyer stays in that property for a period of like maybe 5 to 10 years, because it's a way of building generational wealth. At the same time, there's an appreciation on the property, which gives that borrower or that homeowner instant equity as they continue to look at those opportunities. However, we do find that there's a limitation on philanthropic gifts, and that sustainability of a down payment assistance program needs other resources. So we're currently evaluating other types of investments for supporting down payment assistance initiatives. On top of that, you raised a very good point talking about where is their inventory, and particularly affordable inventory. So we are working with some of the other banks that have maybe REO properties or real estate owned that's by a bank or either in a trust, as a way of offering that to some of the community groups that are participating in this that may have home buyer counseling programs, and will then be able to provide that type of education and support before the home buyer goes into it. But at the same time, giving the bank some type of consideration under what we consider what we call the Community Reinvestment Act, which is a law that provides that every bank has an affirmative obligation to meet the credit needs of all that live within a particular assessment area with that bank serves. And so we are looking at how REO property donations or either discounted offerings can then be given as some type of CRA consideration to the banks that are participating in Project Reach.
Now, I guess I should go back and ask a beginning question. How many minority banks are there? How many banks could this potentially affect in the country nationwide? And then I'll ask for North Carolina since that's, you know,
So there are currently about 140 some minority owned banks in the country. The OCC supervises about 46 of those banks. Out of those 46, we see that we have about 5 that are African-American owned, because that's typically the segment of the industry that has been hit the hardest, because what we see, and we say this quite a bit, that when the economy takes a downturn, that some banks or some communities may catch a cold where African-American community will catch the flu.
Right.
Probably not the best analogy to use in this
right now, yeah.
pandemic, but it just goes to show you that the severity of the economic impact whenever there is any type of challenge, those types of community, the African-American community is hit so hard that we've lost so much when it comes to resources and the offering of any type of access to capital and credit, because the standards tighten for those institutions. So what we're trying to do here is to figure out a way of not only addressing those investments for those banks, the African-American banks, but also looking at it across the board, because it's not just the Black-owned banks or the African-American owned banks that are serving the communities anymore. They're serving a much broader range. So we find in Los Angeles or either in Chicago, you may have a bank on the South Side that could be either Asian owned or either Latino owned. And we're finding that there's more of a not necessarily a segregated community anymore, but you have people from various different cultures. And with immigration, there's so many people who live, which would have been a traditionally Black neighborhood, and they are now part of the community where that MDI is serving. And so in order for that MDI to really expand their business or to grow their business, they have to also look at the other demographics that are now in the community that they're serving.
One of the things that keeps popping in my mind as we're having this conversation is opportunity zones. Is there any coalition or collaborative effort, or do the programs necessarily have the potential of working together?
So they do. As a matter of fact, we at the OCC just currently, as I mentioned earlier, talked about the Community Reinvestment Act. We launched an initiative to make some modernization to the rule. And you're now hearing that the Federal Reserve is also doing something along that as well. Our goal was to really focus on ways that we could evaluate the data of what types of transactions are being made or what types of products are being offered to the communities that need it most, instead of just looking at the actual geographic area, but also the borrowers within those geographies and who are they? And are they getting the same access to resources as the people who are moving into that geography? So that focus for us has become a driving focus for us to really get this taken care of, or really get this to expand that access to capital and credit. And one of the things that we are doing is to consider those investments made into opportunity zones as another way of supporting CRA investments into the communities that need it most.
Another thing that pops into my mind as we're having this conversation, you talk about big banks, small banks. Is there any mentorship between the two that are developing? And maybe I'm missing a part of our conversation, so forgive me if I am.
No.
A lot of information that you're dropping.
Forgive me for not including that, but as I mentioned, under our revitalization of minority-owned banks, we have not just the investment part of it, but we're also considering or giving support for executive exchanges, technical assistance by a larger bank to a smaller bank, like a mentorship. But we find that it's something that is definitely needed. There's an expertise at one level that is not necessarily seen at the MDI level. Mm-hmm. What we're trying to build out now is this way of providing that same type of like expertise at an MDI, so that they can then offer more services to the community that they're serving. This is part of something that we just put out a couple of weeks ago, which is an MDI pledge, where larger institutions have made a commitment to support investing in MDIs, supporting executive exchanges and technical assistance, supporting services to their consumers, and also building business relationships with those with MDIs as well, where they can either have some form of either a loan participation or consortium lending, where it creates an earning stream or an income stream for the MDI, and they can then expand their capacity as well.
Well, let you offer one more question. It might be a big one based on everything you're saying. But what with Project Reach, what other projects do you have on your shelf there, OCC, that you can talk about now?
Well, I'd say Project Reach is a huge undertaking, but in my office, my unit at the OCC, we are also responsible for leading the diversity of the industry, meaning the bank supervisory industry. So we are conducting recruitments through what we call the National Diversity Internship Program, where there is typically not been an interest by a lot of minorities to get into bank supervision. But we find that it is a great opportunity for people who have finance backgrounds, accounting backgrounds, or studying those fields in college right now, that we can help them with going into a new field that can create a wealth of opportunities. So that's another one. We also are leading our MDI collaboration as well. And we have what we call the Collaboration Roundtable, which used to be separate from Project Reach, but we're now incorporating it into our Project Reach revitalization efforts for MDIs. And then I'm also responsible for our high school student internship program, because the NDIP, or what I refer to, the National Diversity Internship Program, that was geared towards college students. We're now trying to develop the next level of minorities in banking by introducing high school students in the Washington, D.C. area to the OCC, the Department of Treasury, and other agencies, federal agencies that have a supervisory function.
Okay, well, I appreciate it. Your time is valuable. I'm not going to keep you any longer. I truly appreciate it. You provide a wealth of information to the WTOB listing audience, as well as the virtual audience that goes as far as RealSavvy will take them. So have a good evening. Enjoy the rest of your holiday, sir.
All right, thanks, Chris. You have a happy holidays too.
You know how to help your clients find the home of their dreams. And we know the perfect mortgage can make that dream come true. We are Guarantee Rate Affinity, a joint partnership between the third largest retail mortgage lender and your company. We're here to help you look good to your clients and sell more homes. How? First, we make the process as simple, seamless, and awesome as possible. And that starts with our expert loan officers. You might have met some of them as they work alongside Coldwell Banker agents. Clients love our easy digital mortgage, which can have them ready to make an offer in minutes. We have over 100 loan products with some of the fastest turn times in the industry. And because our loan experts are fueled by the most advanced mortgage technology platform, we can help you and your clients at any time, from anywhere. Plus, you'll love tools like Loan Status Monitor that keeps you in the know, and Flash Close that shortens closings from hours to minutes. Above all, we're committed to the belief that your success is our success. So, when a buyer needs a mortgage referral, bring it home to the loan officers who work right alongside you to get dream homes closed. We are Guarantee Rate Affinity, and we are your mortgage company.